Good afternoon and welcome to the end of week Profiteer Trading video. Today we're going to talk about the British pound and how to trade the news. First, take a moment to read the risk disclaimer and just remember that all ideas and trading discussions, market data, and anything you see on the Profiteer Discord or YouTube videos is for hypothetical educational purposes only and should not be misconstrued as financial advice. So just take a second there, make sure you read that, and then we'll get started. All right. So today we're going to talk about the PMI manufacturing that came out this morning about 2 or 3 a.m. Eastern for a, in the UK, that would be in the morning, obviously. So for a nighttime trader, this is a good asset class to consider. If you would like to trade futures in the morning and you don't want to trade the Forex pairs, you can trade the Forex futures. So in this particular instance, we're going to look at the pound futures. So you'll notice first and foremost that the actual price of the future is different from the price of the Forex pair. So here we have the Forex pair, GBP USD, and that is the pound dollar. And it's a little bit different than the actual futures ticker symbol, which would be BP or 6B, and that would be due to the fact that it's priced just mildly differently. And if you want to know specifics, you can look that up on the CME. But most importantly, what you should understand is that you can still express your ideas with the relative movement that you'll see in the pound dollar, but I do recommend that you do your analysis on pound dollar first. Okay, so let's go ahead and talk about what happened this morning. So you can see here, this is the block of liquidity that began developing into the 3 a.m. Eastern time zone. And what's important to note is that here you can see that as we progress into that time period, we start reaching higher value area, and we're breaking above areas of liquidity from the prior trading days and holding that bullish zone with strength just prior to the report. And if you look here on a daily chart, what's going on in the candles, you can see that on the current daily candle that developed and closed today, we started off with a open at the below the close of the prior candle, most importantly, of the previous day. So you can see we open, we flush straight away into a wick of pure absorption, and you can see that that's represented on the single print here, and that happens at the early morning hour. And I believe, if I'm not mistaken, that the current trade in this DOM is representing the post-reaction. And you can see that we were long originally, trying to catch a bid in that wick, expecting a larger wick to retest the retracement of the initial previous monthly opening range. And you can see that this is the monthly opening candle. But we retested this channel, and if we head over to the 1 hour, you can see that this morning we came up into this straightaway wick. We were well away from the 200-day moving average, and then we started to flush what would be a already priced in PMI. So you can see that the PMI was a 49.8 versus 48.8 expected. So that's the ninth month of contraction, but the highest since April. So something that is coming up is the Bank of England's rate decision. So these types of economic data points are what's going to affect price action in the pound with high volatility and high opportunity. So this particular trade here was developing value area between 55 and 60s on the pound dollar cross. The future here was developing between 36 and 40s, up to 55s and 60s. So we got short at the 58s here. Once we realized that we couldn't break back above the initial balance range high of the initial absorption move, it's clear that we're still unsure because now we're long 58s at the moment of the trade. But that's why we were watching carefully to watch this absorption that you can see here, collecting all the liquidity that's trying to buy this thing. Eventually, it becomes clear enough to us that this is what we need to do, and that's get short. So sometimes you kind of have to look for those snaps in liquidity. There we go. We flip over to short. Now we start to see the flush. And this is happening at this range here in the morning. So this candle is developing into that morning session. And at this point, we're looking for a simple break below the previous hourly candle and essentially the lows that were developed over the prior day's Asian session. So you can see that once we broke value area and retested 46s, we started to see capitulation with a single print here on the TPEO. And now if you watch the order flow, we're retesting 44s. So that's going to be right here. This is like 4 o'clock in the morning. And the initial target we were looking for was 110. We were looking to scale into 110 liquidity zone because of this prior gap from the 22nd of January. Because all of this rally leading into the PMI looked to have been already priced in. And this is how you define that, okay? When you get these big spikes, you can define on a technical basis that, okay, 2020 monthly opening range, we open at a high. Over the month, we carve out lows and make a big selling attempt back into areas of confluence against the channel that's developed from the monthly range. We retest the channel 1, 2, 3, 4 times. The fourth time we fail again with a massive wick on the hourly, and then we develop a nice rotation back to the moving average. So you can see here we're retesting 46. Buyers are trying to pick it up, trying to absorb that selling. And at this point, this is pretty much all we had. Let's actually make this 15 minutes so you guys can really get a gist of what it was looking like at that point in the day. So you essentially had this movement occurring on a huge candle that developed the largest range of the day against that key area of inflection. And when it broke, you kind of saw this capitulation down to the yearly opening range defined right here from last year, guys. So that's really important. An easy target for us to set our sights on, given that it was such an accelerated sell off of a good report relative. So you can see 44s keep retesting. I'll fast forward this for you guys a little bit. So you can see we snap back into 48s, absorb some selling liquidity. You can see there's some reloading going on here on the last quantity traded. There's a one lot to the downside. Straight away back to 53s. Can't break above. Back down. Filling up the liquidity. So everybody who was long from here and here and here, expecting a breakthrough these key psychological levels, was met with a pretty ruthless pressure on this candle. And you can see how it developed here, and where these single prints played a key role from the previous value area that left a lot of excess back from the 22nd. So you can see we had to be patient here and wait. Retesting 53s again. Buyers are stepping in. Just going to fast forward it. And note the large volume node right here. So this is strong liquidity that's holding down the floor and creating a difficult wall to break through for sellers. There we go. We're snapping right back to 53s. Starting to tick over it. Potential that buyers might see some acceleration. And we're just remaining patient. We've been in the trade for about 18 minutes. And then straight away back against those 50s and break. 46s and break. And now you're starting to see some capitulation occur. And that's when this moving average was being retested. And a clearing of these original buyers was starting to attempt a liquidation. And you can see, look at the volume. Notice that the volume spikes with a large selling increase. There we go. We broke away from 46s. Now we're starting to flush through this available inventory and just liquidating. Straight away back down to 30s. And guys, this is all an accelerated move based on news. And the more that you trade, the more you're going to learn how this works and how to trade it appropriately. Because if you consider the report, it was a positive report. But in this industry, good news is bad news and bad news is good news, in the sense that you want to buy rumors and sell news most often. And sometimes you sell rumors and buy news, if that makes sense. But you can see here we're retesting 30s. We have to be patient here. We're flushing. And then break away straight back to 30s. Retesting liquidity. And now you're starting to see the capitulation. You saw the flush below 30. We're starting to size into the trade. Now we're going to want to take a sized leverage position, full sides, because we're already on side, okay? So, oops, fast forward a little bit too much there. Okay, so you can see here, the news really kicks in, people are really capitulating, and we make a flush below 30 straight away to 20s, I'm sorry, 31.20s. And then we start to show weakness to the point where buyers are just no longer willing to pick it up. Attempting. And again, that's right when we break through this clear kind of like trend-like pattern that we saw develop over the day. Break below. There it is. We're flushing. Now we put on more size really fast, and you can see how quick that develops. This is kind of the key point of the video is, if I fast forward just a little bit here, notice the moment that we break relative to what the pound's trend-like fashion is. When we break right here and right at this level of inflection and fall below, and let me pause the order flow. When we fall below into the excess, this excess right here, and I really, really want to kind of get this point across. Here's a part of the edge in using volume profile. This excess that developed in a trend-like fashion, meaning that we liquidated shorts and then continued with a consistent value area into an unfair high, and then into a piece of news. That unfair high gave us a stellar short opportunity where another gap of liquidity will come into play later. There was a flush against buy the rumor, sell the news, retest, and break. So when we broke, we knew that we were allowed to size into the trade and go full size. So again, let's take a look at what that looks like in the moment that it occurs. And on the candle chart, it was when we broke this trend line at 31.12.11. Okay, so we've got one lot at 148s. And if I'm not mistaken, as soon as the 120 breaks with conviction, I go ahead and I throw on size. There you can see. And then flush straight away down to 31.03s. And then buyers appear. We accidentally did that. Luckily, we're quick. And then we take some size off because it's volatile and it's moving fast. And then boom, we just got paid. And now we're looking to get filled back below these 3100s. Depending on how this develops. With a stop at break even. Because you have to let it develop. And if it's not a go, then it's not a go. We got paid anyway. Because remember, get paid when you can, not when you have to. And that's when this large volume node appeared for the close of the sort of morning pre-market session. And then we finally got some movement into the close of the European session. So that was really where the opportunity was lying for the day. And there we go. We get some more snap back into failure. Now we've got 88s as a target. Retesting, confluence. And then we keep getting bid up. So we start getting less conviction because we're not trying to stay in this trade for very long. We want to be in and out, and we want to get paid regardless. So it's a risk-off trade at this point. Seeing a bid come in on the tails. You can see there's buyers coming in here. And that was when this candle started to develop and kind of have this large range. We're trying to retest. We're trying. Sellers are capable. We take one lot so that we can actually try and hedge this a little more effectively. So if we get filled here at the 116, we can at least get paid 1 off those 19s. And this is when we were developing this node and kind of filling out this excess and just firming it up. So you can see we're being patient. And that 3100 level is a key psychological level. So we had to be very cognizant of the fact that buyers might not let it break below that, at least in the near term. So just keeping those psychological levels in your mind. So you can see, okay, we're going to take some profit off here. At least try to. It's kind of snapping in that range. There we go. Now we're almost risk off. We've still got one left here. And guys, this is why it's key to learn to trade multiple lots. So I will tell you, if you're getting started, there are micros on the 6B futures, fortunately, and it is $1 a tick. Now we're starting to see a little bit more of that retest of that 110 handle, or 3110 handle. I'm sorry, 3100, guys. It's been a long week. Patience is key here. The important part about this final lot is we want to see that flush. Full-blown flush to liquidity here at these 3088s. And you really kind of see how these buyers step in here constantly once we retest those 100s in that current moment. Trying to pick it up, trying to buy the dip. Because they're really focused on this positive report. But again, if something's been priced in, then of course you have to consider that going into it. And that's a huge element to trading news. So I hope this video was helpful for you guys, and we'll be releasing another video tomorrow on a closing NASDAQ trade. And I hope you guys have a great weekend. Enjoy it. The markets will be open on Sunday, and we will get back to it then. All right, take it easy, guys.